Hello and welcome to my YouTube channel. In this video, I will be talking about intraday options scalping. First, I'll be showing you my profit screenshot and I will show you some of the trades which I took. I will show you the logic of those trades, and lastly, I'm going to discuss points which will help you learn how to become a better trader and scalper. Now, I'm Mohit Pachisia, founder of Technically Sorted, and I've been teaching for the last 7 odd years. In the stock market, I've been for more than 10 years now. What I have learned by looking and teaching, looking at traders and teaching so many traders, that everybody has their own genre. Everybody has their own expertise. Some traders are very, very good scalpers. And if you happen to be finding yourself in that category, this video is for you. Now let's move on to today's day. So in today's day, I took a number of trades, and overall my net profits were north of 23,000 rupees. And if you notice, there were a number of instruments which I traded, primarily some stocks, Nifty and Bank Nifty. I have one trade of which I will show you the logic and how I took the trade and why I took the trade, and then we will move on to our learnings. Okay, so this is the trade which I'm talking about. If you notice, this is a in the money option of Bank Nifty, and I took this trade around 11:39 a.m. and within 10 minutes the stock moved up to from 356 rupees, the option moved up to 418.8 rupees. Now what was happening at Bank Nifty? Why did I buy the call? Let's have a look. So this is how the market had opened in the morning, and this was the area of the open. My eyes were very, very clearly glued to this area as to what the market does when it comes over here. I saw that the market has come and stopped. Now, after some decent consolidation and making a well defined resistance, the market started to move up again. This is where I took the trade entry when I saw momentum gathering up, and within the next 10 minutes, I took my first exit. Then if you notice that at 418 I got out, and then 416 I got in again at a smaller quantity, and then got out at 448. If you notice, all put together from 11:39 to 11:55, the entire trade was done with, and it got me some decent profits. The quantities or the quantum of the profit are not important. What is important is what you took away from it, what you learned from it. Now what happened is that, knowing all factors which were in place in my analysis, this is a 1 minute chart in front of you, but I was looking at multiple time frame. I started up from a bottom, from a top down approach, and looked at the daily charts. Although my broader daily chart view was on the bearish side or the downside, I did happen to notice that there was some support coming in from the market. There was also analysis of open interest done, and primarily the main analysis which is in front of you was on the charts. Okay, so once we saw a sort of cup and handle pattern being very well created, then a breakout happened. I entered the trade and I exited in due time. Now one may ask, why could I not have taken the trade further? My targets were met with, and the cup and handle pattern range had the range calculation of the target was met with, and I had to exit. Now when you are doing scalping or intraday trading, your exit strategy is as important as your entry strategy. Okay, I took a number of trades other than this also during the day, but this is the example which I had to show to you. Now coming to the point as to what the option did while Nifty was moving like this. The option, if you notice, being an in the money option, was moving in sync with the Bank Nifty. Okay, this is Bank Nifty and this is the in the money option of Bank Nifty which I had bought. So my entry zone was very clearly defined right at the time of the breakout, and when the breakout happened, it moved in sync with the markets. The effect of theta decay or implied volatility decay did not disturb me because I got a significant move and I was waiting patiently for the move to go in my favor. So this is how today's trade was done, one of them, and a net profit of north of 23,000 was made, as you can see. Now let's come to some points which I want to talk to you about. If you want to become a better scalper, this is what you got to learn. Number one, stay in complete isolation. Okay, during the trading hours, everybody would do this in the world if they could. During the trading hours from 9 to 3:30, only few remain focused, emotionally neutral, and relaxed enough to take the trades at the right time. Most of the people are getting disturbed by something or the other. Either they're occupied with some other work, or the phone keeps beeping, or they're checking the notifications, or this or that. If you want to become a very good scalper, learn to sit in isolation and be completely undisturbed. Once you are in complete isolation, you will notice that the market starts talking to you more and you start focusing more. Not only that, because scalping is very sensitive to market timing, those 5 seconds or 10 seconds delay in your trade could cost you something. So be careful about it and stay in complete isolation. Stay a little away from disturbances and any other topic that could waver your mind to make your mind wander to some other direction. Number 2, wait for the activity levels. Markets can be slow and boring sometimes. Sometimes they can be so dull that if you don't trade for 2 days a week and trade for 3 days a week, yet you are sitting in front of the screen, you can still make money. But who has the control? Many people don't have the self-control, especially the newbie traders. This generally roots to the fact that why they are trading. Most people are not trading methodically. They are trading because they are greedy. They think they can just get in and get out and make some money quickly. No, this is not what markets are for, and this is not how professional traders think. If you are waiting for the key activity levels, that means you're being prepared with your analysis even when the market is not moving. Your work does not just comprise of taking a trade and sitting on it, or exiting a trade, or managing your position. Your work is equally important when you're being prepared for the trade which has not yet come but can come anytime. So be very, very clear about waiting for the activity. When the activity levels rise, when the market shows you a clear picture, then you take your trades. Number 3, methodical trading is key. As I just said, please ask yourself, are you being greedy, or are you trading because you are very clear about your method? Trust me, when students come to me, a lot of them come to me and they are battered, and they say that I have made so many losses in the markets in the past. I want to learn from you. I want to get better. The first thing, and I've seen many turnaround stories, huge turnaround stories that even inspire me. The first thing which I tell them is, ask yourself why you are trading. And when we drill in the method into them very, very clearly, what happens is, when the method is so convincing, then you want to trade only because your method asks you to trade. Unless you get to the point your psychology is not in the right place to trade, this is what I would say. So please keep your method first, and your M2M and your profits and your losses later. Number 4, take breaks. Okay, take breaks to get off the screen. Okay, there's some problem with the slide. I actually wrote this wait for activity levels twice. Okay, number 4, here we go. Okay, take breaks to get off the screen. Now what happens is, of course you have to be in isolation, you have to be undisturbed, you must focus, but it's equally important for you to gain some perspective. When you're in front of the market, often what happens is that you tend to get sucked into the market's trend. You want to chase a trend, or you want to see if the market is going according to how you believe it is going, but it is not always true. Sometimes taking a step back and gaining perspective helps. Also, secondly, what happens is, when you have made a profit or you have made a loss, okay, your mind sometimes gets influenced emotionally because of the amount that has come in, or maybe some amount that has gone. Okay, so you need to absorb that emotion and get yourself back to a neutral state of mind. So often I do this, so I don't end up chasing the trend, so I don't end up getting too emotionalized with my trading. When I take a good profit, I completely bury the trade. I do not chase it. I get off the screen and absorb those profits. Okay. Number 5, money management discipline. This is key, because not each and every trade will make you money. This is the reality of trading. Even if you are very, very good, maybe out of 20-30 trades, one trade can go wrong. Maybe out of 10 trades, one can go wrong. So what you need to do is, you need to keep your stop losses very, very clearly defined, and your position sizing very, very clearly defined. These are the 2 things which cap your downside. Listen to this carefully. 2 things that cap your downside. Number 1, the stop loss. Number 2, your position sizing. So if your position sizing and your stop loss is very well defined, and you consistently work with the same position size, what you will find yourself is in sometimes get into very good trades which will be worth holding on to for some big movements. The rest you can scalp out for smaller movements, but the downside will be capped. Okay. Number six, psychologically be prepared. Okay, please be prepared psychologically, because it becomes very difficult for people who are not in the right mindset to trade. Okay, as I said, everybody in the world would be doing this if they had the choice, but there is a reason why everybody in the world does not do it, because yourself, your own mind comes in the way. So if you really want, you can be and do and achieve whatever you want. But if you are psychologically prepared, only then, if you are doubting yourself every moment, if you are being too greedy or being too fearful, you're not being able to trade. It's not going to happen. So please be psychologically prepared. If you don't know how to, then talk to someone, get a mentor. I'm not saying you have to learn from me, you can learn from some other person also. But do get yourself psychologically prepared. I have seen this, especially with some of my personal mentorship students. Hands-on, I have seen this. When there is a change and shift in psychology, everything about your trading changes, and everything about your life changes. Okay. Last point and the most important point: do not trade your M2M. Trade the market. Your entire focus should be deflected away from how much money you're making or losing, or how much money you made yesterday, how much additionally money you made today, how much money you lost today, which came from yesterday's profits, blah blah blah. All that should go away. You should be trading and focused only on where the market is going and whether or not it is tradable and a reliable move to get in. So this was it from my side. To know more about me and Technically Sorted, go to www.technicallysorted.com. Thank you for staying with me. Have a great evening, have a great day, have a great morning, whatever time of the day you're looking at it at. Thank you so much. Take care.